Ladies and gentlemen, a lot of different numbers coming out about the US economy. Like always, some good, some bad, some in between. But you can take a look at the general vibe of what's going to be happening over the next year or so, as we're coming up on almost a year before the 2026 midterms. A few important 2025 governor's races, but I'm going to be going through a few of the most simplistic key metrics when it comes to the US economy, when it comes to all the major asset classes, cryptocurrency, a lot of people talking about Bitcoin for quarter four, also the S&P, just the general stock market, as well as gold. Everything seemingly at this point is set to hit or is reaching new all-time highs when it comes to Q4. We had the 0.25 basis point cut in the mid-September meeting. According to Polymarket, as you can see the betting, they expect another cut in late October. So there's a meeting on the 29th. If you look at the FedWatch tool, they are also expecting two more 0.25 basis point cuts before the start of 2026. There are two Fed meetings left. Right now, we have the interest rates at the 4.25%, possibly going all the way down to 3.75% by the December 10th meeting. According to this, they are also expecting another 0.25 basis point cut on December 10th. So going into the new year, the expectation right now is two separate 0.25 cuts. That would be three straight Fed meetings with the quarter point cut. And so that's the expectation right now. So that's going to be bullish in general. How does that compare with where we're at in terms of inflation? A lot of this is coming from Powell directly saying and hinting at. I mean, even before the September meeting, he had said, yeah, we expect a cut. There's going to be a small cut. And now there's other statements that people are making within the Fed and some of the people on the board saying, yeah, there's going to be more cuts coming. They're going to be smaller cuts, meaning the 0.25 basis point cut. But it is a very bullish time. And you can see the S&P, not surprisingly, it's reaching new all-time highs. We had the big shock drop, if you want to call it that. I mean, many people involved with crypto, this is not that big of a drop, but certainly for the S&P 500, a lot of people, a lot of boomers very angry about the loss that we had in early April when Trump implemented the massive Liberation Day tariffs. It was a shocking maneuver in terms of the scale in which, and also the number, the sheer number of the tariffs, where it was like 120% tariff on some countries, and those numbers came back down, they got revised. And at this point, to this day, I think Trump does have his tariff policy relatively in place, at least on the countries the United States does majority trade with, although it seems like we are still seeing, I saw a few weeks ago, more tariffs go into place on like Chinese films and other things, being forcing U.S. film crews from filming overseas and using different locations, things like that. So I think the majority of the tariffs at this point, they're played out. The ones that are sticking are on. The tariffs are generating the United States. I mean, you can guesstimate, well, it's around $30 to $40 billion per month. We'll have to see. Could it be around $300 or $400 billion a year? Would that really cut into anything? Well, it could cut into the deficit that we have of $2 trillion, especially if we're able to continue to lower the interest rates. You don't have the crazy high payment at the end of the year that would also contribute to more debt for the United States. The debt total is up to, I think, $37 trillion. But the point is, we've seemingly recovered. And now at this point, the idea is the United States will still be able to benefit. We're still humming along in terms of the S&P. Yes, there are some underlying metrics that are cause for concern, but there's always going to be with the U.S. economy. You could find a bevy of metrics, no matter the time, no matter the year, no matter the period, that could be a cause for concern with the United States. Maybe some issues in terms of consumer spending and especially businesses not spending nearly as much because of the uncertainty due to the tariffs. But I would say when it comes to the S&P 500, the thought is, well, we've survived. This is a great entry point for people if they wanted to enter. Same thing with really any of the majority index funds. But we've survived, we're humming, and now we're generating not free money. I mean, it is tariffs. You can say, by the way, another thing that Powell did admit, and I think this is very key because Powell obviously, or Trump does not get along with Powell. Powell does not get along with Trump. Powell did say that the tariffs that are being imposed they're not passing the cost onto the consumer, so they're not raising the prices for whatever reason. It could be a bevy of different reasons. Mainly it's because of competition. You can't afford to raise the prices if your competitor is not raising the prices. So we're seeing a lot of these corporations eat the tariffs, which will limit their margins to a degree, but it also creates a good, the idea is that even if they have smaller margins, we're going to have more production in the United States, and we're also not going to be dealing with the inflation, which would be caused by the companies paying the import fees and then saying, well, if we have to pay these import fees, we want to still have our same margins. To keep our same margins, we've got to raise the prices. We can't raise the prices if we're competing with other businesses or other corporations. So apparently they're eating it, and they're just going to be, that's what Powell has said. And, they're just going to have smaller margins. At least that's how it's working right now. Now, in terms of the overall inflation rate, you can see it currently is at 2.9%. Now, what I'm going to do is I'm just going to go to the past year. So taking a look at the inflation rate the past year, when Trump entered, it was at 3% even. And not non-surprisingly, it went all the way down to 2.3%, mainly because of the shock loss of the stock market and the tariff situation. There are some people that want a full reset of the U.S. economy. They would love to see the inflation be nullified under 2%. If you want that, you're probably looking at true recession. People say we're already in a recession. Technically, what was it, mid-2023? You could argue that definitionally it was a recession, albeit it was minute in terms of the back-to-back quarters of contractions. But it was like, what was it, minus 0.3 or minus 0.5. And they say, well, that's, technically it is a contraction in 2023 under Biden with a higher inflation rate. What the inflation was like 3.5%, 4%, which is not a very good sign. At least if Trump was going to go through back-to-back contractions, we would have had a very low inflation rate. Inflation rate would have been brought way down. Now, I think the reading in what is the reading going to be? October 15th is when they're going to do the reading. And I would imagine the report in September they're saying is about 3.0. So I would imagine that is going to be a liberal talking point, is with the recent Fed meeting and the upcoming Fed readings and the interest rate drops that we're expecting. They're going to say, well, inflation's going to balloon. But if you just look at the added context, and certainly COVID had a major impact on this. I'm not saying it didn't, and I don't want people to get used to 3% interest or inflation. It's not good. But I mean, we are still at a relatively low spot versus where we were in the last 5 years, especially under Biden. Yes, there was COVID, which had a major impact on this. But when you zoom out, it's not like we're seeing this catastrophic rise of inflation. And that's normally what I say when I talk about inflation. It's under control to a degree. And if you cut by 0.25 basis points, you're not going to see inflation spiral out of control. It's not going to be anything ridiculous. Again, a lot of that inflation, the extreme inflation of 5%, 7%, 9%, back in 2022 is heavily related to the handling of COVID and a pandemic that shut down the economy, at least for a few months, and shut down certain states. So we're not going to be seeing anything like that. Could we see maybe 3.2, 3.3 inflation rate? Would that be an adequate trade-off to see a crazy cryptocurrency bull run in quarter 4? I think it would be, but depends what you own, I guess. You've also got this. So this will be released probably October 25th, I believe. It's after the quarter, the next month, the 25th of the next month. So that would be Q3. Right now, we are starting Q4 with it being October. The Fed the Atlanta Fed predicting around a 4% growth rate. We had a I believe the number was revised in Q2, 3.5. It was originally 3.3. It came in again at 3.5 growth rate in Q2. So a 3.8 growth rate in Q3. So that is good growth in terms of the GDP. We remember Q1 was negative. That was, it was pretty much Trump's quarter. And a lot of that had to do with March and the situation with the tariffs. But, also Biden was in for about 20 days as a lame duck as well. And that was the whole narrative of, well, it's definitely going to be a recession. Although it's like liberals want a recession. If you really want the inflation down, you would probably need definitionally a recession for that to happen. But obviously we didn't have that. They said, well, Q2 was going to be negative because of the Liberation Day tariffs, because that happened in April. So that was the start of Q2. and it was a growth of about 3.5%. Now we're dealing with a growth of almost 4% in Q3. So we're still seeing significant growth. You do have the S&P at an all-time high. We've got the bonus factor now of hopefully bringing jobs back to the United States through the tariffs. Worst case scenario, the tariffs will give the United States another revenue stream of hopefully 30 or 40 billion dollars. Maybe it's a little bit less. That's what the Trump administration is saying. They say, well, maybe it's up to $50 billion. That's monthly, not annually. Annually, they say maybe $400 billion, which hypothetically could cut into the deficit. About 20% of the deficit would be paid through tariffs if they decide to do that. I think they might take a different approach, which some people may not like. It's like, are we really at liberty with the amount of debt that we have to do this? Where they might try and mess around with some of the income taxes and maybe eliminating some form of taxation on people that make under 100K. That's another thing where you say, well, these people don't like that. They want to be a part of the tax reduction, if you make more money. But that's a midterm thing. That's an election thing. I mean, if you are creating a new revenue stream and bringing in 40 extra billion dollars, and we live in a society in which the way the taxes are structured, if you understand capitalism and the amount of money that some people make, I mean, the rich people pay an extreme amount in terms of taxation. So hypothetically, you could significantly lower the tax bill of people making under 75K or 100K, because the rich people are already paying everything because of the way capitalism works with the amount of money that they can make overall. So it'll be interesting to see that. And then I also wanted to take a look at Bitcoin. So a lot of people are going to be talking about Bitcoin over the next 2 or 3 months. This is the time for Bitcoin based off of the 4-year cycle. There are people that don't believe in the 4-year cycle anymore, but it is acting in clear, there's like a clear relationship still with the 4-year cycle. I do think in the way Bitcoin is discussed and held as an asset with ETFs, we're not going to see as crazy volatility with it. I don't think we're going to see Bitcoin back under 50K or 60K. Maybe that might be a conservative prediction. A lot of people say it's not going to go back under 100K. I don't know about that. But in the past year, it's basically done a 2x, which is pretty remarkable for an asset that has a market cap of around $2.4 trillion right now. Now with Bitcoin, the question is, can it catch gold? And obviously, it's not going to catch gold this cycle. Catching gold would be Bitcoin to go over, at this point, $1 million a coin. I would say this cycle, I said around 205K. The indicators that I'm seeing, some people say a lot lower. They say 150, 170K. But I do know that Bitcoin right now is basically at a new all-time high. I think its all-time high is 123K. And you have to understand, an asset with this level of market cap, I mean, this is comparable almost to NVIDIA. NVIDIA is about 2 times this, or maybe it's around 4 trillion, maybe a little bit less than 2 times this. It's comparable to Microsoft. It's comparable to Alphabet. It's a major asset. You're not going to get 100x off of this coin. You're not going to throw $1,000 into Bitcoin. I mean, those days are long, long gone. If you wanted to be a normie and make it off of Bitcoin, you're probably looking at investing in 2015 or 2016. You got to be very early on these things. But, you want to hold Bitcoin as just a stored value asset, which ironically it wasn't supposed to be. It was supposed to be an actual currency, and it can still be used as a currency. But that's what it's being treated as now. It is a stored value asset. It is literal digital gold. It makes sense that we would have a digital version of gold because of the way in which the internet is used nowadays, because of the ease of transactions, the ease it is to send millions and millions of dollars of Bitcoin from wallet to wallet, to move the money extremely efficiently. It does make sense. And there are things that are better than Bitcoin at doing that within the crypto world, but obviously Bitcoin has the full narrative. It's understandable based on how old it is. So I would say Bitcoin at this point, within the next 2 or 3 months, maybe even month and a half. I mean, it might be an extended cycle. I think people are hoping that now, based off of the modeling I've seen. I mean, it would have to really run within the next month or so, and it still might. I mean, it's a very bullish time for Bitcoin because you have the 4-year cycle coming up. It's a year and a half after the halving. And you also have the next 2 rate cuts we're going to be seeing of a 0.25 basis point. We have a positive GDP growth. We have positive S&P 500 at an all-time high. So there should be extra loose revenue for people to invest into Bitcoin and to onboard into cryptocurrency in general. And Bitcoin is completely mainstream at this point. Everybody knows about Bitcoin. So That's just the take on some of the obvious indicators. I do think, I mean, we'll see. But you get the rate cuts, where we're at in terms of the cycle on Bitcoin and many of these cryptocurrencies. It should be a very, very nice Q4 for pretty much everything. Of course, with the S&P, it's like a never-ending chart, just going up and up and up, albeit at a very low percentage. But still, it is a safety valve that I know a lot of Americans like to use, and you're getting a 10 to 14% return, whatever it is, annually. That's something you'll definitely take. So either way, guys, that is going to do it for this video. Make sure you like the video down below. Also follow me on X. Link to that's always in the description.